In today's video, we're going to talk a little bit about Fedex. Now, I hope we don't have earnings on this soon. Let me just double check that real quick. Not until March 19th, and it's not confirmed. Okay. Anyway, if you look at a daily chart of Fedex, I mean, this is what you should see. The fact that it's a larger bearish pattern of lower lows and lower highs. Price is clearly below the 200, though it's not below the 50 anymore, and the 5 and 13 are in a buy mode. So we have mixed parameters as far as the moving averages are concerned. But typically, if you're looking at this pattern and the pattern has not broken, what would you expect? You would probably expect this market to falter. And I'll show you why. Because some of these prior swings are very similar to the most recent swing here, okay, which was $36.10. Compare that to this swing, which was $36.81. Compare that to this swing, which was $37.77. Okay, so that's why we have run into resistance here. Now, typically, if the bearish pattern is going to resume, or the bears take control again, then we could see another full leg down, right? That's a possibility. But I want to remind you about taking this work from one decision to the next. Because even though, yes, it's still a bearish pattern, there's a decision right here, right now, that you have to look at next. And that comes from simply taking 100% of this prior decline, projecting it from the recent high, and then running a retracement. Okay, so here, if we take this high to this low, project from the high, that gives you 175.78. If you just run the retracement of that most recent swing, then there's also a 786 retracement that it's on top of. And it also comes in, on top of a key prior swing low. So this is the way I have to look at it. If this is a more important high in Fedex, it needs to break this support, break this prior swing low, to look for at least a deeper downside correction, if not more. However, if we end up holding above this symmetry support that overlaps the 786 retracement, you actually have reason to look at the buy side and define your risk right underneath here. Okay, not a ridiculous amount of risk for another potential swing to the upside. Your typical target, if you take something like this, is going to be the 1272 extension of the swing into the zone, which means your risk definition would be underneath here if it triggers an entry, and your potential target number 1 would be the 189 area. So risk reward is pretty good because you're only going to risk just a little bit under here if it triggers an entry. Don't forget about triggers. And then that's the potential target number 1. Okay, so let's see what the next decision is in Fedex. Just know that if it doesn't hold this support, that yeah, it probably is going to give us a deeper downside correction. But here is your immediate decision right here, right now, 175.78 to 176.61. Have a great long weekend. I'll see you guys Tuesday.